fam? Welcome to another episode of Good, Bad, and Ugly about real estate with Jose. Got a great guest for you today, Keola.
Hello, guys. Thanks, Jose. Thanks for having me on today.
Absolutely. You know, one of my good friends from the Owners Club, as he represents with his hat. So, as always, on this episode, on our podcast, why don't you share a little bit about yourself and how you got started in real estate, why you decided to choose real estate?
Yeah, you bet, Jose. First off, appreciate you taking the time to have me on. I know you got a lot of big time guests on here, so giving me space. I know it's called The Good, the Bad, and the Ugly. I guess you already went through the good, you already had the bad, and now it's time to interview the ugly. So I appreciate you having me on for this episode. Right?
I wish it was so. It's not so, my friend. But let's go.
Yeah, so I'm born and raised in Hawaii on the island of Maui. And, first off, being a kid on the rock, I never thought I would ever leave paradise, right? Hawaii's paradise. It is. Never thought I would leave the island. Thought my whole life we revolved around everything around the ocean, being back home and being Hawaiian, right?
Sure.
And when I finished college, I really wasn't doing much with my life except for enjoying the sun and the surf.
Gotcha.
And
that's a bad life.
Yeah, it was horrible life. Hated every minute of it. But one day my dad called me up and he's like, "Hey, come home. Your mom needs help painting the house." I was like, "Wait, what? Why don't we just hire somebody, have somebody else paint it? I'm busy working. I'm doing my thing."
Right.
And he was like, in the Polynesian culture, when your parents speak, you listen.
Sure.
And he's like, "Listen," I said, "come home, jump on the flight. I'll pick up at the airport. Just pack a weekend bag. You'll be good." It's like, okay. Jumped on the flight.
Clarifying question. Where were you at? Because you were at school, right? When they asked you to come home?
I just graduated. I was living on Oahu, a different island. My parents were on Maui. And so I fly home thinking I was going to spend the weekend working, right? No big deal. I always go home to work, do something around the house to help out.
Sure.
I get there. My dad's there to pick me up. And I see him, and he's just got this very stern look on his face. And I was like, "Hey, where's mom?" It's like, "Mom's not here." It's like, "Okay, well, let's go home." He's like, "No, we're not going home." I say, "What?" He's like, "Listen, this is for you." And he handed me a plane ticket. And I looked at the plane ticket, and it was a plane ticket to Utah, one way. And I looked up, I was like, "What is this?" He's like, "Listen, you're not doing anything good with your life right now. Time for change. Your brother's about to move his family from Utah back to Hawaii. Get on the plane, go help him pack up his house, be there for at least 6 months, and we'll decide what's next for you."
Oh, wow. Okay.
And I looked at it, was like, "What?" And I looked at the plane ticket, and he's like, "You better hurry up. You might miss your plane." And I was like,
you know how to think about it.
He's leaving in an hour, right?
Yeah.
I looked at him, and just in our culture, like I said, just a stern look. He didn't say a word. He just looked right at me. I took the ticket, turned around, and walked back up the stairs and jumped on a flight to Utah. So people always ask me, like, how did you go from being in Maui or in Hawaii to being in the mountains of Utah? And, I tell them nice, like, well, I moved here to help my brother and his family pack up and go back to the islands. But in reality, it was my dad kind of with, father's inspiration saying, time to pivot, time to change. And when I came to Utah, it was a big culture shock, a lot of differences. I really didn't know a lot of people. And so, it's my brother and his family, which is good, right? A good surrounding, a good home to be in. But he had 3 girls. And so I had to really personally change up what I was doing in my life to be a better example for them.
Sure.
Right. And so at that time, I started working for a fitness club local to my area. And I found at that time, I was like, man, this is a great opportunity. I'd finished my degree in exercise science. So I was, accustomed to being in the gym, being around physical fitness and all those things. And I looked around and said, hey, this is a great opportunity for me to really get started in an actual job. And so I joined the company. I joined in when there were 2 locations. And I recently exited that company and helped them grow from 2 locations to 55 locations.
Wow.
8 states, and I just exited about a year and a half ago. And so I was part of their executive team. I had a great success, absolutely loved it. But I spent 22 years in the fitness space before pivoting and finding real estate. So, long story short, 22 years in the fitness space, everything was going great, growing this company, expanding, right? I had shares in the company. So the better they did, the better I did. It was all working out phenomenally. One day, my wife came on the shoulder and she's like, hey, listen, our oldest son is a senior in high school next year, and this is going to be it. He's going to be out of the house after this. Something's got to change.
Uh-oh.
And I was like, well, what do you mean? Like, we're doing good. We've got this great lifestyle we're living. What do you mean something's got to change? She goes, listen, for the past 8 years, you've been on the road traveling. And I was literally living out of a suitcase, hotels and airports every week, just traveling a lot, right? To expand the company, to do what I love. Like, I loved it. But my wife's like, this is his last year. After this, he's gone. Something's got to be different. So we sat down, we had a family council. We decided that it would be best for me to turn in a resignation package and exit. And, long story short, after a month of negotiations and discussions, I accepted the exit package, left, and, I left and I was like, man, what am I going to do now? Right? We were in no rush. Like, I had a great exit plan. I got a great exit package, no rush to do anything different. But I started taking all these calls, Jose, like for interviews, right? Like I got flooded, like it was just coming in from everywhere, all across the nation. And I'm lining up all these calls, jumping on these interviews. And my wife is like, what are you doing? And what do you mean? What am I doing? I'm trying to get a job for us. Like, like, what's next for us? And she's like, you just left a company you absolutely love. You've worked for them for 22 years. You're in a great position, great role, traveling a lot away from us. That's why we said you should end. You're now interviewing for a company you have no idea about, in a role or higher, traveling again, doing all these things. You're stepping back into the exact same position and space. And I was like, you're right. And after that discussion, a friend of mine introduced me to Pace Morby and said, hey, you got to check out this video. I'm a part of this group. Maybe it's something you might be interested in. And, as they say, the rest was history. From that first video on, I was like a bug to the light, mesmerized by it, entranced, and I jumped in head first. And so I've been a part of Pace Morby community for a year and a half, a little over a year and a half now. And that's really been my only experience in real estate. I mean, we've had rentals we've owned before, but I wouldn't call that experienced.
Sure.
I still feel like I'm learning so much, but that's kind of, from my dad to my wife, I would say I live my life by the 3 F's, Jose: faith, family, and food.
I love it.
And not always in that order, but in this situation, my dad with his faith and my wife as my family and my boss kind of guiding me along this path, saying, hey, this is where you should be going. And me being humble enough or willing enough to listen, and so that's what led me into the real estate space, to Pace Morby's community. And that's how we met.
Absolutely. So, I mean, I know that Pace has more than one community. So which community did you start off with? Let's ask that question first.
Yeah. So it was with the Gator community. For me, the reason Gator method was so attractive is it appeared to be the lowest barrier of entry and the type of education that I wanted to learn more about. I knew I wasn't necessarily wanting to be a real estate agent or learn creative financing at that time, but I had capital that I wanted to deploy. I wanted to get into investing. I wanted to get into lending, and Gator method provided that immediate path for me.
Now, I know this answer too, but is that the only community that you're a part of?
No, as you know, when I joined the Gator community, being a part of it, I've learned that there was so much more to be a part of. And last year, I joined with you, the Owners Club. So I'm blessed to be a part of Pace Morby's Owners Club community as well.
So how has Gator been for you? Like, people hear that term, and you mentioned, and you kind of related it to that it's a lending um, education program. So, what kind of nuggets have you learned in your journey of lending through that program?
Yeah, great question, Jose. I would say there's so many nuggets learned, but two immediately come to mind, right? The first one is don't go it alone, right? I tell this to so many people. When you jump in, whether it's Gator, whether it's sub two, whether it's top tier or owners club, the the community that is provided and the atmosphere that Pace creates allows you a space to really feel safe and secure within that group. And you don't want to ostracize yourself or focus on competition. You want to focus on collaboration and teaming up, and you don't have to go it alone. And so I think for so many people, when they get involved in business or they get involved in even athletics, right, they want to be the best out there, and nothing's wrong with that. But if you think of it like a team sport and you look to partner up and team up with great players, you can go a lot further, right? And so don't go alone would be the number one lesson or nugget that I learned from joining the community. Um, the second is the network, to kind of break out of your shell. You know, I have a tendency to not enjoy reaching out that much with people. I know it may not come across that way,
Right.
but I have my own self doubt and disbeliefs of myself that I have to overcome. But when you network and really get out there to meet people, you you're able to find your tribe, right? And as you've heard before, your vibe attracts your tribe, and when you have the right tribe, you're not alone, right? And
Okay.
when you can have the right people, you're not alone. You have people that are educated that will support you along the journey. Then you can start taking action and feel more secure and safer with educated decisions and mitigated risk. And so those would be the two big pieces that I would share with everybody in regards to whether it's the Gator method or any other community. Don't go it alone, and network with people to find those that are resonating at your same frequency.
Good advice. Good advice. So, some people might say, but you said it was a lower entry, lower barrier entry, but I don't have any money. So, can you kind of share how you started lending? Did you use your own and then maybe migrate to using other people's money? Did you always use other people's money? How do you protect yourself? Because there's a lot of scams going on out there. Can you share that a
Yeah.
bit?
Yeah, you bet. You know, I can't sit here and say that every lend or every deal that I've done was perfect, right? Nor am I here to lie to anybody and say that they all went great. I've got a few that went past due. I got a few that went longer than expected. Um, your fingers crossed. Luckily, I haven't lost any money yet, although I got some bad news yesterday about one that might be a loss.
Sure.
But I just want to be real with people that there's going to be risk in everything, right? Even the guaranteed deals have risk. So just be mindful of that. And everybody has to take their own risk tolerance assessment
Sure.
when they do deals. But uh, when I first entered, what attracted me to the Gator method, as far as a low barrier, wasn't necessarily the price point. If that wasn't it, right? A lot of people say, "Hey, Gator's cheaper. Go join that." It wasn't that at all. It was how to negotiate into a deal without having to understand all about the real estate itself or all the deal structure construction or the laws about um, contracts for building it. You didn't need to have all of that to get started. So that lower barrier of entry was what attracted me. And the second thing that attracted me was the concept that EMD was everywhere, right? Earnest money deposits was what attracted me. Like, hey, I can lend money for a short 2 weeks, 3 weeks. Oh, I'll do that all day. And oh, it doesn't need to be over 10,000. Oh, I can do that all day too. That's what I thought. And what I found when I stepped in the community is that they weren't as prevalent as I initially thought they were. I'm not saying they aren't there. I'm just saying that they weren't as prevalent, right?
Right.
And But what was prevalent and what was everywhere, like, can't even shake a stick at it, is private money lending deals or gap funding opportunities. And so for me, um, I felt like I needed to get moving and to learn through taking action.
Sure.
Uh, I'm one of those guys that are unfortunately a ready, fire, aim type of a guy.
Okay.
Like if we're talking about like sports, we'll shoot a basketball. I'll toss that ball up and then reassess my shot after I see where the ball lands. Right?
Gotcha.
Okay, like time to adjust, more left, more left. Okay,
Yep.
I got it. Right, that's me. So I started just taking action in the community. Once again, going off after, was I teaming up with people and not doing it alone,
Sure.
and my network. But I started initially lending with my own capital on deals with others that would allow me to JV or partner up with them to learn by taking action and in motion. And so I didn't follow the same path that a lot of others do, where they didn't have capital or they needed to get business lines of credit created. I had capital, and I just started investing.
Okay. So being a Gator myself, I know there's what Pace calls, Gator one, two, three, four. Are there any outside of um, EMD, double close, or transactional funding and gap funding? Have you ever ventured into any of the other realms of Gator?
I think there's so many things of Gator that hasn't been discussed in trainings.
Sure.
But I've done a loan sponsorship that isn't covered yet. I've done a business loan that isn't covered yet, but all with people that I had established relationships with,
Sure.
and previous other types of ventures together on.
Just to give you a little bit of kudos and some credibility, you have been basically the I'll call it moderator of our Gator Zooms for newbies or even more experienced Gators to kind of teach or help people that may have some deals that they needed to get underwritten. Is that not true?
Yeah, I've been lucky enough and fortunate to be asked since joining the Gator. Like I said, I've only got a year and a half under my belt, right there. So there's people that have lent a lot more than I have, but in that time frame, being able to network and connect with a lot of great people, to do a lot of deals myself and learn, but also be able to network and talk to people who are willing to share their stories with me. And in that journey, in regards to Gator, I've been able and asked to do two things, right? One is do weekly Zooms within the Gator community that talks about relationship building and networking. That's one. And then the second thing is I've been privileged enough to be asked to host Pace Morby's Get Creative podcasts once a week. So I do those two things on a weekly basis. That keeps me pretty busy and allows me to meet and talk with a lot of action takers and people that are pretty big movers and shakers, and not just in his community, but in real estate in general.
Gotcha. So, kind of alluded to this earlier. What steps do you take to help mitigate your loss? You mentioned that you haven't lost one yet, which anyone who does investing in real estate knows that there's risk and there's going to be some times where things just don't work out. So, what kind of things do you do as a person who lends money different ways to try to mitigate your risk? Because when I first started, there was nobody telling me, "Hey, you should make sure you have this in place or that in place," so that way um, you're protected, right? Pace is kind of like our has guided us through certain things, and he shared his way when he didn't know what was going on,
Yeah.
right? Lending money for payroll, lending money for this and that, and he didn't know about contracts or trying to protect himself. So what
Done
do
it.
you do
Yeah.
now to kind of protect yourself for people that are watching this?
Yeah, you bet. I would say if you're going to get into the space of lending, you definitely want to educate yourself, right? I hear too many people that lend without any knowledge or experience and just let their money leave, right? Their good hard-earned money just leave without getting a basic of understanding. So educating yourself by identifying your lend box. It's a phrase that not a lot of people talk about, But people need to understand what a lend box is. You hear about buy box all the time, right? So we just flip that coin over and we discuss a lend box, right? And so you need to understand, what is your lend box, right? What is the amount of money that you're willing to lend that you would feel safe and secure, and understand, like, hey, if you lost it, okay, it's gone. But what is that lend box, right? What is the amount of money you're willing to lend? Number two, because it is your money, you can set regulations around or restrictions on how long you're willing to have that money out, right? Is it 6 months? Is it 8 months? Is it a year? So you identify your total lend amount. You identify what is the term of the loan that you're willing to offer. Then you identify what is your returns, right? It's your money. You can say, hey, I've worked this much for this money. I want to get a minimum of, I'm just throwing numbers out there. Everybody's got to identify their own 12%, 15%, 18% return on this money, right? You determining what that is rather than kind of the opposite, like negotiating on, well, would you be willing to do this? If you can say, here's my lend box, I only look at deals that are greater than this amount on a return, it helps you move away from bad deals or risky deals and stay in your lane. So identifying your lend box with the total amount, the term, the rate of return, and then understanding what are your securities, right? What securities do you want to have in place to protect your money, right? And sometimes people don't go over that in enough detail to identify what they're willing to risk on, right? And security could be something as simple as what lien position, right? Are you willing to lend only in first? Are you willing to lend only in up to second, or riskier, right? You have to decide what are the securities you want to have in place. The lien position is one of them. Other securities that could be incorporated. I'm not saying this is a hard fast rule, but other securities would be cross collateral. It could be personal guarantee. It could be lender's title policy. It could be homeowners insurance. Whatever securities you feel you want to have in place to protect your money, you want to have that written down, right? So you have your total amount, your term, your rate of return, your securities, which are key because that's what protects your money, right? And then a caveat for other, like what are some other rules you want to put on yourself? Are there states you're not willing to lend in, right? Are there types of projects you're not willing to lend on, right? Are there certain rules for yourself? Like one rule I have for myself is I won't lend to the same borrower on 2 deals at the same time. I will only lend 1 deal per borrower at a time, right? So whatever that is, you set those rules. And when you have your lend box created, it helps you stick true to your guns. And when deals come your way, you can just kind of cross compare, right? A, B, B, C, C, D. No, nope, done, right? And that way you stick within the parameters you establish for yourself instead of sometimes chasing something big or chasing something quick that doesn't fall within your lend box and something goes wrong. And so that's what I would say to those who are listening in, or to a new person, to identify your lend box and stick to it. Now that lend box can evolve, right, Jose? Like your lend box probably evolved multiple times, but it can evolve. When you first get started, just establish it and be set.
Exactly. So, we're in January, 3 weeks into the year, and most people have started, planning their year out. So, what does 2025 look for you?
Yeah. So one of the biggest goals I have for this year, it's more of a number goal, and to say I can do it, is I want to do 50 transactional deals this year, right? 50. And when I say transactional deals, I mean escrow protected lending, which is specifically either an EMD or a double closed deal. So I want to do 50 of those this year to help wholesalers grow, to help commercial real estate investors grow their portfolio by providing those type of funds.
Awesome. So, the podcast is called Good, Bad, and Ugly. So how about you share us a good story, one that, like kind of like the highlight of your career, and then maybe one that's like, hey, a lot of people can learn lessons from this horror story that I went through.
Yeah, I'll share two things, right, that kind of relate to what we've been talking about networking and taking action. Um,
Sure.
And I'll tie it all together. So, my son, he's 14, turning 15 in a month, right? And
Okay.
so in Utah, that's the age people get to drive, right?
Okay.
And so he can go out and get his learner's permit next month, right? And so we're all afraid for everybody on the road. So next month, be careful if you're on the road in Utah. But he's 14, turning 15, and he wants to go practice. He wants to go drive, right? And 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 we tell this all the time, like, did you read your driver's manual, right? Which they give, right? You have to go study for the permit, read your driver's manual. Did you read your driver's manual, right? He's like, oh yeah, Dad, I read my driver's manual. All right, well, I'm going to have you watch and pay attention to all the things that I'm doing while I'm driving, right? When I signal, when I turn on my blinkers, like when I do this, while I'm stopping here, right? I want you to watch all of these things, right? So read the books, watch me drive, watch other people drive, sit in the car, and do all these things that'll help you learn about driving. All of those things are true. But at the end of the day, right, Jose, I've got to let him get behind the wheel.
Yep.
At the end of the day, he's got to get behind the wheel at some
Sure.
point, right? And luckily in Utah, they have to take driver's ed,
Yep.
right? And in driver's ed, I'm not sure if you guys have seen those cars that they have nowadays, but in the driver's ed cars, they've got brakes on the passenger side,
Yep.
right? And they've got other things that can help protect everybody in the car for driver's ed. And I share this with everybody because, I talked about teaming up and don't go it alone. When you're new, when you're just getting started, a lot of times you're afraid to take action. Well, if you're out there driving by yourself, that's not the right thing to do. If you never read a book, if you never watched somebody else drive, you never went to driver's ed, please do not get behind the wheel. The same thing applies to real estate business, whether it's investing or doing deals. If you've never read a book, you've never watched somebody else do it, and you're not doing a course or learning from somebody, don't get behind the wheel of real estate, right? And so I share that with you as a good thing, because the first 10 to 12 deals that I did as a gator all came because I teamed up with somebody, I networked with others, and I didn't do the deal by myself. None of those first deals in the community within the community that have been successful were done on my own, right? And so team up, like I said, and learn how to drive, but learn how to drive the right way. Go read those books, go watch somebody else do it, and go find a mentor or a team that can help you in motion, right? So that would be the good story, where, even for myself, when I first started, it was the network and the people I teamed up with that allowed me to feel more safe, more secure on doing deals. And they helped me learn what gaps I had. And, I was able to accelerate my learning and my pace because they showed me the pitfalls. They taught me how to overcome those challenges. So where they fell, I didn't have to go through the exact same thing.
Right. So now what about this horror story that you got?
Oh, yeah. So, like I said, most of the deals I did have been pretty good, right? And I also said most of the deals that I did with others were phenomenal. So the one time I break my rule, do something on my own by myself with a friend that I had known for a while, that deal is the one deal that's gone south, right? And come to find out, there are others that are involved behind me in third position, and others that should have paid me out, but me being too trusting, me not leaning in and inquiring more, like, now this deal is probably going to go into foreclosure and I'm going to lose it all. Maybe. Well, still pending. But of all the deals, that's the ugly deal. And it's really, it became ugly because I didn't stick to my guns of what I just shared earlier, right? Of identifying your lend box and sticking to it, teaming up with others and allowing others to help you learn through the process. I didn't do those two things with this one deal. And because I broke my own rules, here it is now coming to bite me in the rear.
Awesome. So now we know what you do. You lend. What is it you're looking for? If somebody wanted to partner with you, how can they bring value to you?
Yeah, well, two things, right, Jose? Number one is first, I love people. So connecting like this with you on your podcast, I'm grateful for that. Thank you for giving me the space to come on and learn from you as well. But I love meeting people. I love hearing their journeys. I love talking to them about mine and seeing how we can learn and grow together, right? Like that's something huge for me. That in and of itself fills my cup. Whether we do deals or not, to me, it's not necessarily all about the deal. It's about the relationship. So I love networking. I love connect with people. So that's number one. Reach out to me. Let's connect. Number two is, I shared it before. My goal is to not just do 50 transactions, but also to help people scale their business in wholesaling and in real estate investing. And so if I can help you on that journey by providing the funds for your EMD or your double close deals to let your business grow and scale, please let's connect. That way we both win, right? It's not just one-sided, but we both can go after something together.
Just for the audience, that's how I know Keola. I mean, we met back in Scottsdale, but last year. But I've reached out to him. He's helped me underwrite deals. He's helped me try to find end buyers for deals. He's actually helped me try to find deals in his area that I know that he's familiar with. And so that's the one thing I love about you, man, is like, even though you got your own stuff going on, every time I reached out to you, you're like, yeah, man, I got you. Or, hey, call this guy. This person's probably the better person to, work out your deal. Prime example, the sub two multifamily deal that I reached out to you, like, oh yeah, this is the guy you need to talk to. This guy, he's like the guru of underwriting. I was like, all right, good, So yeah, that, that's a great example. I took from, as Pace would say, out of your backpack, put it in my backpack, so I don't have to start from scratch.
Yeah, I love
So,
that. Sometimes people call me a referral zealot, right? Like as I talk and connect with people, when they share their stories, their strengths and their opportunities, immediately people's faces start running through my head like, oh, this person can match, right? That person can match. This person, they need you, right? And so it's almost like, you go to a casino and you pull the wheel and all of the things start spinning. I see people's pictures come up like, Jose needs this. Pull the wheel. Ding, ding, ding. Oh, these three guys
right.
connect with that. Yeah.
That's awesome. So if somebody wanted to get a hold of you and either ask for help or see if they could partner with you on lending, how would they do that?
Yeah. The easiest way just to streamline connection with me is to jump on my Instagram. It's at Keola_Keala, KEOLA_KEALA, but Keola_Keala on Instagram. That's the best way.
Awesome. And if you don't see it, it's right there on the screen as a screen name. I'll put it in the description for you guys. So don't worry about that. Keola, thank you, my friend, for coming out and spending some time with us. I loved having you on.
Oh, thank you, Jose.
Aloha, right?
Now I know, right? We were following the sequence, good, bad, ugly. Now I know whoever's interviewed next is going to be the good.
Oh, is that how it works? I'll have to figure that one out. All right, fam. Well, until the next episode, we'll see you next time.
Mahalos.